Good afternoon, everyone. This is Brad Matheny again. Wow, what a day. I mean, could this have played out any better? Again, this is the continuation of the Plan Your Trade series of videos. Been getting some wonderful comments from everyone and just wanted to say thank you to everyone. I do my best. I'm not foolproof. Certainly am not going to be hitting 100% all the time. I read the data. I just got done commenting to someone about the totality of my research. So every week, and every weekend, every Friday, Saturday, particularly, I spend more than 7, 8 hours going through data and trying to see what's going on. I've got my custom indexes to show me what's going on and show me whether we're in trending or consolidation mode. I just picked a beautiful bottom in gold. I've been warning people for months that the markets were going to shift and that innovation and undervalued and ignored sectors were going to start to skyrocket. I really do believe that's going to be the next big opportunity. You're going to probably see, 50, 60, 80% moves in the markets over the next, wow, getting all this stuff comments. So I'll get back to that in a minute. Look, we've got a lot of opportunity. If you followed any of my videos, I'm going to just give you a summary that we're going to move very strongly into the end of this year, into a solid uptrend, I believe, carrying into 2025, likely running into some consolidation in 2020, mid late 2025, maybe 2026. From there, boy, we're off to the races. I think. I really think that we could see a Dow print up into 70, 80, 90,000 range. I think we could see the Nasdaq up at 38, 40,000, and I think we could see the SPY up at maybe 1100, 1200 by 2029, 2030, 2031. And remember, I've been saying this, pardon me, for almost 3 years, little over 3 years, that the markets are going to enter an extremely opportunistic mode over the next 3 to 5 plus years. And there's nothing we can do about it other than sit there and ride it to the best of our ability and make a bunch of money, hopefully, and then catch the downside when it does kick in. But what I wanted to talk to you guys about was my efforts to do this. Originally, I did this as an example to show you guys how the SPY cycle patterns of my research work. I did it by trying to predict 2.5 weeks worth of future price data. I was very clear in my expectations. You can see the data here. We started after this big rally phase, 17th and the 18th. You know, I amaze myself sometimes. Who could have predicted that the market would come down, stall, roll back up, roll back down, and then roll into this massive rally phase to new all-time highs? Well, only pretty much one person, and I hate to say it, it's me, because I have tools and I have resources that I built over the last 10 plus years that nobody else has. I mean, I just built a data mining tool that allows me to determine the highest quality trade triggers on any symbol, any interval, on pretty much anything. And soon those may be applied to the SPY cycle patterns as well. But what I do is research and write code, and I share my information with you guys to try to help you guys become better traders. I teach you what I've learned. I teach you about things that I'm studying. Like right now, I'm very focused in the Fibonacci. I just made a comment about that. I believe Fibonacci is the key to everything, but I believe it's deeper than just the 382 and 618 and 50 levels. I believe it's much deeper than that. I believe it falls into vortex math theory. It falls into energy, frequency, amplitude, vibration, all types of things that are very infrequently discussed here. And I've been studying this now for close to 3 years, trying to put the pieces together. I think I'm close, but it's going to take more research, obviously. In the meantime, what I am going to do is I am going to extend this series out so that you guys can get more and more of this SPY cycle pattern data, and I can try to help you. Now, remember, this week, I don't want to say is an anomaly. I'm just going to say this week played out very, very well. It's not always like this. There are going to be times when I'm going to suggest things might happen that won't happen, or I might suggest things, and I will always give you an A or B option, like I did here. Today, I expected this consolidation and then a moderate melt up into this area. I did warn that if we got below this area or this area, to be very cautious and wait for a potential bottom to set up. So I will always teach you what I call a success or failure mentality with regards to trading. This is what I expect as the primary outcome. And if I'm wrong, this will be the secondary outcome, which will be how to profit from the failure side of my expectation. That's something I learned about, I don't know, 15 years ago, that professional traders must always have a plan A and plan B, always, and always contain risk. So what I am trying to teach you guys is the techniques that I've learned um, from being in the industry. Remember, I got started in the industry in 1986. Really got my feet wet trading in 1988 and 89 and 90. And by the time I was in 1990, 91, I was already involved in the industry as a software developer, specializing in Japanese candlesticks a long time ago, guys. That was, 35 years ago. Okay, so here we go. What are we looking at on Friday? Well, we're closed out the week here. Futures might trade, obviously, a little bit through the July 4th holiday. I expect to see some consolidation. What I would warn you here, I'm going to spread this all the way out, is that we've had a very solid rally, and markets don't just move in a straight line. You can see how we've already accelerated above these trend channels that I drew this morning. We're up here at my target area that I mentioned almost perfectly. And I'm going to tell you again, folks, markets don't move in a straight line. So what we're looking at here is more than likely we're going to see a little consolidation into Friday and then attempt to maybe move into an upward trend. That's what I expect to see. We will see how things play out over the next couple of days. Now, remember this area here, and I will extend this to the right and try to extend this to the right. Okay, so there we have, there we have our channeling. And when I say that we're likely going to move down into this channel, I think that we are going to probably see, and this is a channel from a while ago that we don't need. This was, I think, a drawing of what I expected to see happen. So again, critically, we have to have this support level hold. And this is, again, all based on Fibonacci. Let me show you one concept here that I need to start reinforcing to you guys is Fibonacci, the 382 to 50 area as critical support. So at this point, we've had a fairly substantial upward move. We've got a new high. Watch my Fibonacci price theory videos. It teaches us that price is always seeking a new high or a new low. Always. Okay. We have a new high right here, new closing price high. That tells us that we're now in a solid uptrend. That now tells us that we've exited this consolidation phase, this range. Now we have this critical support level right here, basically 548.29 to 547.40 roughly. This now becomes our critical support area. So in a way, I could move this right up into here and say, hey, this is the area we want to try to protect. Price should stay above this level as it continues to move and continues to trend higher. And as it trends higher, we would adjust this level upward from these lows back here. Remember, where I drew it was from this rejection point up to the closing price level today. So this is really our support going into the 4th of July weekend. And tomorrow and Friday, we want to see price maybe roll back into this 550, 550 and change area, finding support kind of in this area, right in here, the good solid support area, and then rolling upward into Friday. The momentum move into Friday could be very, very powerful. Same kind of setup will happen on the QQQ. Let's go take a look at the Qs. And here we go. Here's our channel. This was our flagging, never really happened. So there's a good example of me being incorrect. I'll just leave this for now. Long and short of it, folks, is we are way above this level. We're going to draw our Fibonacci levels. We are going to have the 382 to 50 support level right here. And what that means, folks, is that we will likely see, if we get any type of pullback, which is fairly likely, we will likely see the markets move back down into this area before trying to find some support and move higher. Again, let's move these, extend them to the right. Whoops, wrong thing. Now, as you're spending some time throughout the holiday, the 4th of July holiday, make sure you visit my content. Make sure you spend some time over here looking at my content. Here, let me get rid of that. Remember, I did this whole series a while back. You just scroll down a bit before the Plan Your Trade series. I did a whole bunch of mechanics of trading. Very important that you go through. There's like 13 of these. And just scroll back to the very beginning. There's the very first one. Started with this Fibonacci price theory and breakout bars. You can start here actually if you want the 5-year expectation. And look here, S&P may rally above 540 before you know it. That was done on May 16th. Guess what? We're at 551. So now I'm calling for 606 on the S&P, SPY. But again, spend some time going through all of this, particularly this mechanics of trading. Very important that you understand these theories and these concepts related to trading. I use all of these all the time. And remember, I've used the Fibonacci price theory and anchor bar theory that I apply daily in my analysis. I'm telling you, I use that every day, and you're going to see it over and over again in charts. I mean, literally, I visually see these without having to draw them on the page. So, for example, I come back over here. Why did I expect this level here to be a concern, particularly down into this area here? Well, it was pretty simple, folks. It was a Fibonacci level. I'm pretty darn sure that if I come in here from the second to the third, where we opened here, to where we closed roughly here. Look, it's the 382 to 50 level. Remember that level I just told you? That 382 to 50 level acts as very critical support. So by just visually knowing where that level was, I was able to draw a triangle this morning that represented a 382 to 50% retracement to the downside, and telling you that this would likely be a bottom if it happened. It never really happened and just went up. So now, why am I expecting this pullback? Simply put, guys, the markets are a bit overextended. More than likely, we're going to see some sort of a pullback to either retest into this area here for the Qs or down into this area here before we continue the momentum rally higher. If we break out to the upside and continue higher, that's still success. That just means that the markets are not ready to pull back yet. Okay. And that'll possibly also happen over here on the SPY. If it just rolls higher and does not look back, then remember, this is still solid upward trending. It means it's trying to establish a new peak, will eventually establish a new peak and roll downward and consolidate. Price always either moves in trending or flagging. And right now we're in pretty solid trending. Okay, guys, have a safe fourth. Appreciate all the comments. Oops, get rid of that. That's one of my servers. And especially, I can't remember your name, but Fam, something Fam PF family, calling me the greatest of all time, the GOAT today. You know what? I'm just a guy who's done a lot of studying and research, and all I want to do is help as many people as I can. So let me help you, and use my resources, and let's try to keep this thing going. See if it turns into something big. Okay, guys, talk to you later.